Hello again, this is Alex with MasterChartsTrading.com, and this is market recap from May 25th, 2018. So first of all, please hit the like button and also subscribe to this channel if you haven't yet subscribed. We'll pretty much do the same thing as always. We'll look at stocks, large caps, and small caps break to fresh highs, but the Semiconductors lead and the bond Proxies lead, so it's a little bit unclear what is happening, especially with the investment grade bonds rising, junk debt not rising, so picture is confusing somewhat. We'll look at quite a bit of detail at the Forex Action, and especially some of the lesser traded ones like Turkish Lira, etc. We'll look at gold in quite a bit of detail, and I think the dollar is basically going to set the direction for gold. So yeah, we could see a strong move either way for gold. We'll look at oil and XLE, the energy ETF, as they come off the highs. Natural gas as usual, and it is approaching that area of $3. And we'll again look at cryptos. Okay, so let's begin with S&P 500. So nothing really happened. S&P 500 basically traded in a range for the past couple of weeks. In general, this is a bullish chart. Here's a latest alert I had for my subscribers on the 9th of May. You can already make this a profitable trade if you entered that same date at close. So this is working okay. Again, you know, SPY is basically the barometer of the market. S&P 500 is the barometer of the market. So some sectors outperform, some sectors underperform. Again, I'm using throughout the presentation, I'm going to be using this indicators, these 4 lines on the chart. So you got the green, the blue, the red, and the yellow line. And you can find out more about them at MasterChartsTrading.com. These are basically support resistance lines, and they call price action, in my opinion, quite well. And my subscribers and myself, I've been using them to trade quite successfully. So let's look at QQQ, the Nasdaq 100. Nasdaq, you know, you can't really catch every single, price swing. Sometimes we were able to get in on a trade. Sometimes we're not able to get on a trade. So, for example, this latest upswing, I wanted to look for an entry around 163. So far, the price didn't come down there. But, for example, here back in March and in April, there were 2 alerts already that you could have, entered on the long side. So for now, again, the stocks are bullish. They're on an uptrend, and the reason being is because fresh highs, and we're approaching fresh highs. If the opposite picture, I'll show you later on for bonds, is true right now, where bonds are breaking to fresh lows, and then we should look for selling opportunities, shorting opportunities. But stocks for now look bullish. So here's, for example, another major part of the market, the small caps. Again, bullish chart. These are fresh highs set just this week, actually. So, this is a bullish price action. We had several alerts. For example, the latest one was in March. Here in May, we didn't really trade this one, but notice that if you held this position through this minor drawdown, really, into April, you can make nice money right there. All right, let's continue looking at stocks. So we have small caps break to fresh highs. This is actually quite good for the market because small caps are more risky, and this is showing good appetite for risk by the investors. Semiconductors, we usually look at XSD, semiconductors, diversified semiconductors. Latest alert was here as a limit. You could potentially were able to get in here on the 9th of May, so it's possible. But again, you can't really catch every single price swing, so don't bother. You will catch some swings, but you won't catch every single one. This is discretionary trading, and we're not really after, you know, being like robots. But semiconductors looking pretty good, you know, they're moving to fresh highs, or approaching fresh highs. So this is again a riskier sector of the market, and this is showing good appetite for risk by the investors. All right, let's look what else I wanted to show. Okay, so bond proxies, we have PGX, which is preferred portfolio, preferred stocks basically. So here what I'm seeing is I'm seeing a bounce of the lows, a pretty strong bounce. I think if this security doesn't get shorted around 1450, then I think we could run a little higher. It will depend on the bounce by the bonds, and we'll get to bonds in a few, but here's quickly TLT, and notice that TLT hit fresh lows here on the 17th. So TLT is a treasury bond fund, and TLT, you know, sets the long-term rates. Preferred portfolio, preferred stocks, they sort of mirror the investment grade debt, such as treasury bonds. So here we see a fresh low for TLT, and then a bounce higher. So PGX or PFF also. PFF is a preferred portfolio fund. So yeah, you can see that it moved off the lows. It's still, I think, a bearish security, and I would, if I was trading, I would be looking to short it. Another utility, bond proxy is the utilities. So here's XLU. Notice price action showing, you know, quite well by the indicators. Is catching the indicators are catching the price action quite well. Notice where the bottom was found, exactly around the yellow line, and then we bounce. So I think if I was trading it, I would potentially short it around 51 bucks, maybe with put options, if you so desire. But this to me still looks like a bearish chart, and I think that here would be a decent place to short around 51. It will depend on the bonds. You know, if TLT bonds continue higher, I think utilities will continue higher. But for TLT, I would look for a you know, conservative short level here at 121 basically. So yeah, you can also play it with put options that as well. XLU, and then finally a real estate. Here's IYR, real estate. So on this breakdown on the 16th, this short did not yet work out. Again, I would put my stop if I was shorting it above this support resistance line, which is currently around 79 bucks. But you know, again, this looks to me still bearish. I mean, this is a fresh low bounce, and then we're bouncing basically around the fresh lows. I mean, we made a higher high here. This is possibly a higher low. So we will see if we will get a breakout above this support resistance line, currently at around $79. If we do get a breakout, then I will look for buying opportunities for real estate myself. I mean, this looks possible. It will possibly go higher from here. Yeah. But for now, you know, if I was trading it, I would either avoid it or potentially look for shorting opportunity. All right, let's get to bonds next. Right, let's look at bonds in a little bit more detail. I just showed TLT in its relationship to various bond proxies such as utilities, real estate, or preferred portfolio. So here's TLT again, making fresh low on the 17th of May here, 2018, and then a normal looking bounce, pretty sharp one. And I actually sent to my subscribers, unless aggressive short level comes into play here at around 118.35, then I think I can easily see a run up to around 121 here. So here is a conservative short level, and actually previous two times, one on the 3rd of April and another one on the 11th of April here, I was showing similar price action. Notice that we had a nice move lower afterwards, so this could have been a nice shorting opportunity. So we'll see if the same thing happens now, and if we run up to 121. And again, at that point, I would be pretty comfortable shorting it too. Here's the investment grade corporate debt, also similar picture. Fresh lows, now a bounce above this yellow support resistance lines, and we could continue slightly higher, but again, this is a somewhat quite weak security, and I think we can see a rollover and fresh lows on this one. And here's the overall bond market, the investment grade corporate or the investment grade market average AGG. Very similar picture. Again, a bounce to above support resistance. Possibly we're gonna continue slightly higher, but again around 107. That would be a killer short levels basically. Now the interesting part is currently the junk bonds. Notice that junk bonds didn't really bounce at all. This is basically a sideways chop for the past few weeks. What versus, for example, TLT, you can see the investment grade corporates jump, investment grade treasuries jumped strongly. To me, this is showing a somewhat of a flight to safety response by the investors. And the fact that junk bonds did not bounce also is showing that there is a possibility of riskier assets such as junk bonds and stocks, coming under further pressure. So again, I wanted to show the same chart as I quite often show, and here it is. This is a fund, Delaware High Yield Opportunity Fund, and I looked at the composition of the fund. It's very similar to junk, JNK. So here I just wanted to show that basically junk bonds move together in lockstep with stocks. You can see that S&P 500 is graphed here in red. And then down below here we see a correlation coefficient, and notice that vast majority of the time the correlation coefficient spends its time in the positive territory. This is showing that the corporate junk debt and the stock market really move together in lockstep. So once again, I am positing the same idea, is that now we're seeing junk bonds kind of coming under pretty severe pressure, and stocks are looking bullish, but are basically trading sideways. So, and also additionally, we have a narrowing trading range here between, you can see this green and the yellow line. They narrowed even further, whereas before they were quite far apart, so the trading range was quite wide. Now we see a narrowing of trading range. And what does that mean? That means that the price has less will need less effort to travel towards bearish levels. There's less actual price to depreciation for it to become to come to the bearish levels. So overall, bond market is bearish. Obviously, junk bonds could easily break to fresh lows. And if or when that happens, I wonder what will happen to the stock market. I think we could come under some more selling, and especially since the summer month is coming up, yeah, we could potentially be looking at some more selling in the near future. Alright, let's continue to the Forex action, and there was plenty of that this week. Very interesting Forex action. First of all, here's US dollar index on a daily time frame as usual. Here again I'm showing my 4 support resistance indicators. And notice a very interesting price action. Notice that price ended basically 1 cent away from a breakout. So we will see what happens Monday. Now this is a dollar index, and it consists of multiple currencies. So here's one such currency, is euro. And let's just go to euro futures. It would be probably the best chart to look at. So I wanted to change the color of this indicator because it's kind of red and it's kind of difficult to see. So I'm going to make it this purple, I guess, color. So here are the euro futures again, and notice where the price has ended. I mean, we're talking just a few pips away from what I would think would be a bearish breakdown. And the bearish levels are at 1.16755, right there. And the price ended at 1.16795. So we're talking about just a few pips away. So euro futures, I would say that we're turning bearish on this one. We do need a little bit of confirmation, but I think this is looking worse and worse for dollar as we continue. Here's British pound, GBP USD, or we can look at British pound futures. So we can look at that as well. And notice again the price is approaching this bearish levels. So the Japanese yen futures, and by extension the Forex instrument, I'll show in a second, I think they broke out as well. So Japanese yen futures, in other words, in this case Japanese yen is dropping versus the dollar. Had a sizable rally over the past couple of days, but overall I think again US dollar versus Japanese yen, I think it wants to go higher here. So I think the US dollar maybe will be winning this battle. Anything is possible, but looking like the rest of the currencies are also going in favor of the dollar. Okay, so we looked at euro. Again, let's look at euro versus US dollar, and here's euro versus US dollar as it's traded on Forex FXCM. So the prices here are from Forex, and you can see that on this chart you can see a close below this my indicator lines, and I would say that this is a bearish break. Euro futures have not yet broken down, but it's getting there, very close. So here's US dollar Japanese yen I just showed. Looks like we're breaking out to the upside, but again we had a big pullback, so it's possible we'll go back into the bear market. Maybe this was a whipsaw. Okay, so British pound, I think I already showed. GBP USD approaching bearish levels. Japanese yen just showed. So US dollar versus Canadian dollar. Notice again how nicely the price action gets caught by these indicators. You can see one touch right there, another touch. So I wonder if we see a breakout for the US dollar versus Canadian dollar. In other words, Canadian dollar is becoming worth less money versus the dollar, the American dollar. Australian dollar, notice the US dollar is broke down here on the 23rd, and big nice move here towards the fresh lows. We can look at New Zealand dollar versus US dollar, same thing. There's the breakdown on the 25th of April, big move down afterwards. US dollar versus Swiss franc, same thing. You can see a breakout on the 23rd of April of this year, another big move up. So right now it's pulling away from the highs, but I think this is a bullish security. US dollar versus Swedish krona, same thing. There's the breakout on the 25th of April and a move higher. US dollar versus Mexican peso, there's the breakout on the 2nd of May, fresh move higher. Let me see what I wanted to show also. There's a couple of developing country currencies, so US dollar versus Turkish Lira. This fresh lows for the US dollar well, this is fresh lows for the lira, for the Turkish lira. So yeah, it looks like it wants to at least pull back. I think this could easily, this currency pair could easily pull back to like $4.35. It looks like it wants to definitely spike in that direction. But it's a bullish chart, so I would be if I was trading, I would be buying it here at $4.35. By the way, if you need the information about these indicators, send me a message. And here's US dollar versus ruble. You know, same thing. US dollar is bullish versus the ruble. There's one opportunity. Basically, just set a limit buy at the blue line here, which is currently 61.4154, and then hopefully we'll go higher from here. Alright, let me see what I wanted to show. US dollar versus South African rand. Now that's a unusual currency pair, but this one surprisingly looks better for the African rand. I would be actually buying the rand with the US dollar. So in other words, I would be shorting this currency pair. Like there, for example, at the, well, this is a red line in general, but I just changed the color of it to make it easier to spot. But you can, you know, also find out about those indicators and you can get them on your chart. So overall, dollar is looking like it wants to go higher and higher from here. This breakout is brewing, and if this breaks out, gold can really just collapse from here. So let's look at gold next. So number one, let's look at gold futures, and here are those levels. 1307.4, around 1308 or so. You can see price action around that area. So you can see support break on the 15th, and now attempt to rally towards support today on the 25th of May. So far it's been rejected there, and it feels like it, like if I wouldn't bet right now, honestly, which way it's gonna go, but I think if the dollar breaks out, DXY, I think if we get a close above this line, I would potentially look for a shorting opportunity for gold. Here's one idea for those who can trade options or who have an opportunity to trade options. So do a long straddle. Basically, we're buying a put and we're buying a call, and we're buying a put and a call at the same level. At 1305, basically 1307. But we can also do it with GLD, so we can buy one put and buy one call at 124. And whichever way the price will go, I think the price would go strongly that way. So one put would become, or you know, one leg of the straddle will become worthless, and the other one would become quite expensive. So this is how you make money on straddles. And you can, you know, for example, here's one, you can look up how it works. But this is more for advanced traders. If you don't know what you're doing, better stick with the actual stock and avoid the options for beginner traders. It's a little more complex. So overall, GDX also. Let me look at GDX. Gold miners. I'm currently avoiding them. I'm warning my subscribers to avoid them as well. I don't like this price action. It's not very encouraging, honestly. I mean, these are fresh lows, bounce, feeble bounce. Looks like another in a gap here, gap down here. So I think if dollar continues higher, this would probably collapse. Good potential opportunity would be to buy put options at 22.50 50 or 23 bucks, and then for the move lower. So overall, all eyes are on the dollar index. Whichever way it will go opposite of gold. Okay, let's continue to commodities. Here's light crude oil futures. So we see fresh highs, 52-week highs, and now a pullback. Notice where the pullback is coming to one of the indicator lines. So this is like a first support and a aggressive long level. So if you are an aggressive trader, this would be a decent place to buy. For example, here was an opportunity on the April 6th and 9, maybe even on the April 4th as well. So simply potentially one strategy. I have not personally tested this particular strategy, but one way is to simply set a limit buy order at these levels, at the indicator levels, for a move higher. Now, usually I look at commodities and Forex, and I look at the middle two lines, so the blue and red lines here, and you can find out more about them by following the link. If I was setting the bias would be set by the middle two lines, by the blue and red. So for Forex and for commodities, as long as the security stays above the red line, then I'm considering this bullish, and vice versa. When we see a break below the red line, the price needs to travel above the blue line, above the resistance line here, to become bullish. But in this case, we see pretty clear breakout right there on the 20th of September, and then basically a bull market, and we would be looking to buy, only buy. We would not be looking to sell. Right now, basically we're coming down to aggressive buy levels around 67, which is basically where they are right now. I personally don't really like to buying up here, but if it does come down to the blue line, which is currently around 61 or so, then I'll be potentially looking to buy this security. You can also use USO, but again, don't analyze USO. USO is only there as a trading vehicle. So like these levels here, I wouldn't necessarily take them as a granted, because USO slips, so there is slippage and the price tends to depreciate by itself without even any price movement from oil. So I look usually at the futures. Here's the symbol CL1 exclamation point, or you can also do US oil as a symbol, and just ignore this double line here. Overall, again, oil is in a bull market, and I think it should be bought for now. Here is energy XLE, and it's kind of funny, sometimes it's eerie. I send alerts, and there's the alert to my subscribers. On the 22nd of May, energy sector moved to new highs today, but I think the pullback is now likely. If I had a position, I would consider taking some profits. There's the date, then we see a move down. So for now, the minor support around the green line, this is the aggressive long levels, and once again, this is why I don't particularly like to buy up here. I like to buy lower, maybe around the blue line. So this minor support did break at 76.50 or so. I think we're maybe headed to 72.80, which is around, not that far off. But I think at that point we should start looking to buy it. And here's natural gas. Natural gas symbol NG1 exclamation point. This is natural gas futures. So I see already a touch of this red support resistance line. So it's looking like it's really wanting to roll over here. Now I'm gonna look at the price action on Monday. We could still continue higher a little bit, but I think this would be just a great place to short, around $3. So you can do a similar thing with UNG. I mean, maybe like buy puts at like 24.50 or 25 bucks. Or we can do DGAS as well. That's a possibility. And we can use inverse leveraged ETF. Be careful with this, guys. So calculate your position correctly. If you don't know how to calculate the position correctly, ask me. So overall, UNG, NG1 exclamation point. Yeah, this looking like it wants to roll over here. So I'd personally be looking to short it. And finally, we're getting to cryptocurrencies. Bitcoin versus US dollar. BTC USD. This is a bearish security. I already, kept saying that basically short at the red line. You can find out more about these indicators again. If I was trading this, I would be putting my stop well above my blue line here, which is a big difference, but this is a very expensive instrument. So again, bearish, and I would look to, maybe it will bounce a little bit, but I would short it again. So Ethereum versus US dollar, ETH USD, there's the breakdown right below the red line. You can see already a move, nice move lower. So you could have already potentially made money off this. Previously, you can see we had a 40% move lower on March here of this year. Nice move now down there. Again, bearish. I would not be buying this at all. Litecoin, same thing. Bearish break. Good short levels here at the red line, around 150, 160 bucks maybe. And then now another move lower. Ripple, I think it's the same thing basically, but it's just not as heavily traded. But notice how weak this one is. It hasn't even gotten to the red line, whereas ETH USD was even above the red line. Like Ripple didn't even get up there. So overall, I think that most of the major cryptocurrencies are bearish as well. All right. So first of all, if you like the video, please hit the like button, subscribe to this channel, and then head over to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on alerts and indicators, and then sign up for one of the subscription levels. One of the higher subscription levels. Here at $34, you will get also the indicators that I'm using to trade and that you just saw on your screen. So sign up, and I'll teach you how to use them. Again, thanks for watching, and have another great trading week. Bye bye.